Hi, everybody. I'm Brittany Lewis with Forbes Breaking News. Joining me now is my colleague, Forbes staff writer, Zach Everson. Zach, thanks for coming on.
Thanks for having me again, Brittany.
Zach, this is actually a continuation of a story you covered back in May. Trump's SPAC, Digital World, has been trying to merge with Truth Social's parent company, Trump Media and Technology Group, since October 2021. Now, Digital World says its 2021 financial statements, quote, should no longer be relied upon. What's this all about?
It's the same exact problem that we had earlier. Basically, I could have taken the article I wrote earlier and just, in that case, it was about statements from 2022 and just deleted that and put it in 2021. So, yeah, they took the very rare step of informing the SEC that their audited financials can no longer be relied upon. They did not give a specific answer or reason why. They just said it was a material weakness in the company's internal controls over financial reporting, and that the controls and procedures were not effective. They've promised to fix it, reissue, and come up with a plan to address it going forward, but we still haven't seen any details of that.
How big of a whoopsie is this? Does this cross into a fraud area, anything illegal? Because when you hear unreliable financial statements, the red flags start going up a bit.
Right, and with Digital World Acquisition Corp, they have been in trouble with the SEC previously for fraud. So it's certainly something I'm sure the SEC is looking at. But I don't know. We don't have enough information at this time to speculate about that. I think what we need to find out is exactly what the reason is, when the SPAC found out about it, and if to try to address it in a reasonable period of time, or if they let it linger for a while. I think once we get some of that issue, we'll have a better.
And is this common for a company to say their financial statements are now unreliable?
My understanding is that it is not. I'm more on the politics and money side of Forbes versus the business side, so I don't have a ton of experience with this. But having talked to some people who do, they say, yeah, this is really strange. And Digital World Acquisition Corp, launched in 2021, so they've basically retracted their first 2 years of financial statements so far. So they're only, I haven't seen them retract anything from 2023 yet. Doesn't mean it won't happen, but not really putting forth a lot of comfort in what they're disclosing.
This merger is 2 years in the making, since October of 2021, between Trump's SPAC, Digital World, and Truth Social's parent company. Can you walk us through that merger, and why have there been so many bumps in the road?
Well, Trump's business dealings are never easy. They announced in October 2021 that this SPAC, which is basically a holding company that had launched earlier in the year, was planning to acquire Trump Media and Technology Group, which is the owner of Truth Social, as you said. And they have to go through some due diligence on this whole process before a merger can take place. But there've been several issues. Most notably that the Digital World made a settlement with the Securities and Exchange Commission, admitting that it made material misrepresentations in its pre-IPO filings by failing to disclose that it already knew it was going to pursue Trump Media and Technology Group. Now, in a SPAC, it's not supposed to have any plans. It's supposed to just be empty. It's an open vessel. It's Moby Dick, whatever you want it to be. And then eventually it will figure out what it's gonna buy. And there was all sorts of internal documents apparently that the SEC got a hold of that said, no, that wasn't the case. They always knew they were going to do this. So they've agreed to pay an $18 million penalty for that one to the SEC if the merger does go through. The other issue they've had is that one of their board members, or former board members, the SEC is charged with insider trading of the securities, and two other people are being charged with that. That case is in the very early stages right now. And then the other big news that came along recently was that the investors had backed out. They were originally looking for $1 billion. They got $1 billion worth of commitments from investors, but investors had walked away from $467 million of that, saying, you know what, not going to go ahead and back this. So at that point, Trump Media Technology Group has gone ahead and said, you know what, we're going to start over. We're going to refund the other $533 million, and we'll start fresh. So yeah, not really a smooth road here to a merger.
$467 million, that is close to $500 million. Why did they back out?
They weren't confident in what's going on here. They didn't specify reasons. They didn't have to provide that. It's not public, but I don't think it's a stretch to imagine that it has something to do with 2 years of financial statements needing to be redone, and also just the fact that the merger has taken this long. I think that the expectation with the SPAC is it's not going to take this long. You're putting your money in it, and you'll probably get a return selling your initial purchase early on, and not just have to let the SPAC sit on it for 2 years. And similarly, the SPAC is it was trading at 72 as the high, and it's down to about $15 now.
Yeah, Digital World lost in the neighborhood of $200 million in stock purchase deals. Is that because investors pulled out?
It's not helping. I mean, I don't know exactly the reason. If any sort of financial analysis, they'll watch the stock market news. They'll always give you some sort of reason why. I don't know exactly what it is. I think it's probably a combination of all of those things. It could also have to do with the fact that maybe Truth Social isn't picking up as much as people expected it to. So there are all sorts of possibilities there.
Devin Nunes, who is a former Republican congressman from California, he's also Trump Media's CEO. He actually commented on the investors backing out of this $467 million. He said it was a, quote, important step in the best interest of shareholders, and this would complete the merger, quote, as soon as possible. Zach, can you read the tea leaves here? Is this helpful to a merger, or is he just trying to play off a $500 million loss?
I would put it more in under Orwellian doublespeak than anything else. I mean, maybe it is. I'm not super familiar with SPACs, and if this helps, maybe it is good. You know what? Let's clear it out. Let's wipe it out. Let's start new. Maybe that is the case at this point. You've lost about half of your commitments there. But he did not come forth and provide any reason in that statement for why this was in the best interest. And I, certainly would have been curious to learn that.
And what's next here? Does it look like this merger is actually going to happen?
I don't know. I don't know what's going to happen. It's basically, like the House speakership, but been running even longer. We haven't seen anything about it progressing. There's no signs that it's moved forward at all. I would imagine that they have to redo 2 years worth of earnings is probably a little bit of a setback, but yeah, not exactly sure what's going on with the merger, but I would not expect it to happen anytime soon.
And in your reporting, while you were looking at these financial statements, have you found anything interesting, anything else that piqued your interest that we didn't discuss yet?
Wow, there's an open-ended question. Yeah, I mean, it's just the whole social media company is just really interesting. What's going on there? I mean, there's how much it's being used. If when you see Trump return to Twitter recently, and I find that pretty interesting that he has posted some tweets since this has taken off. But no, I mean, they're really not putting out a ton of information out there. They're putting out the minimum that's required, and then it turns out what's required that they're putting out is often wrong.
Zach Everson, thank you so much.
Thank you.